Hi, this is Melissa with Atlas CFO, and we're continuing our cash flow discussion. And the first thing I'd like you to do is, if you haven't checked out our first video on the problems with cash flow in construction, check that out first. Today, we're going to talk about analyzing the problems. So we're going to take kind of a deeper dive into the problems that we've already identified and help you identify which one of these is really present in your business so you can move to the next level. Okay, so the first one that we want to talk about that was a problem in our last video is growth. Now, that doesn't seem like much of a problem, except if you're burning 30% of your cash in growth, it can feel like a problem. So if you have a growth problem in cash flow, it's pretty easy to determine. You can look at your revenues, you can look at your costs, you can see that year over year or period over period, your revenues are climbing. Now, this should not be a surprise. So if you're in growth mode, chances are you know it, and that can help explain why you have some cash flow tightness. Our next problem that we talked about was billing and collection. Now, I'm going to separate these two and talk about each of them just for a minute separately from each other. So a billing problem analysis, what would you look for there? So you would want to look at your job cost, your WIP, your job profitability report, whatever is going to show you your costs and your revenue lined up. Of course, my favorite is the WIP, the work in progress schedule. You can check that out too. But that report will tell you whether you're underbilled or overbilled. If you're underbilled, you may have a billing problem that you would want to look further into. So really analyzing the source would be an issue. The next part of this is collections. So how would you know if you have a collections problem versus a billing problem? Well, if our jobs are all billed, but we're showing information in our 60-day, 90-day column in our accounts receivable aging, a lot of words, then we could have a collection problem. So you have to look at the source of each of those to determine which one you want to go after and see if you can make a difference in. Okay, the next one that we talked about in our problems was timing. So this is whenever you have a situation where you've paid a vendor, but you haven't collected the money from your customer. So how would you know if you have this one? This one sometimes is a little tricky, but you really would have to look at the series of cash flows on a job. You can do that through multiple ways, but if you want to just run a job detail report, you would be able to see the cost hitting and then the customer billings and collections. This is also something you may want to talk about in your accounting department or with your bookkeeper to make sure that you are taking advantage of any timing differences for your benefit. So if you're paying in 30 days, but collecting in 60 days, you've got a timing problem. Okay, finishing. I don't want to dot the third I, doesn't matter what I do. Okay, finishing a job. As I said in the last video, sometimes we were the best 98% contractor. So how do you know if finishing a job is really where you want to work? So how can you analyze this? Well, one of the things you can do is back to that work in progress schedule is how many of those jobs are sitting at 98% complete, 97% complete. They're like right there, but they're just not going over the finish line. If you have something like that, you may need to look at what your punch list procedures are or your closeout procedures are to make sure that cash flow doesn't affect you when you finish the job. And our last guy, retention. How do you know if you have a retention problem? The best way I tell people to look at retention is to print your accounts receivable aging. Whenever you look at that, you'll need to identify which one of those are retention. So in some softwares, it actually tells you this is retention. And others, you'll have to do a little more analysis to figure out. You want to look at what your percentage of retention is to your total accounts receivable. Now, everybody has some general rules of thumb. I personally don't like to see more than 30% in retention. As soon as that happens, it can really slow down our cash flow. Now, in a perfect world, I don't want any retention, but that's a different video. Okay, so you can see that once you've identified the problem, now you have to analyze which one you're going to go after. Sure, you can go after them all, but it makes a difference to be able to just focus on one. Okay, so now if you'd like, if you haven't already watched the video, watch the last one And also please check us out on our website at atlascfo.com and check out the link to our cash flow class if you need to learn more. It's great to see you. Hope to see you soon. Bye.